All right, big trading day. Lots of news has come out, and I decided to do another update because I actually made some trades today and closed out some profit. Wanted to talk about the news, the reaction, and also some of the comments on my last video. A lot of comments have come in, I guess because my last video, a lot of things were said, and a lot of people disagreed with the call and how I approached the pound in that last video. So let's get down to the news today, and then I'll try to cover things pretty quickly. All right, so the CAD trade balance was slightly negative. The unemployment rate has slightly increased, and the number here, this is the one that I'm really looking at the most, is the 35K. So they added a ton of new jobs this month, or last month. And this number, as you may expect, is probably going to override anything else because it's pretty much double, more than double what the forecast was. So that looks like this on the pound Canadian dollar. A huge push down, just about 100 pips, over 100 pips. So that's maybe this can help you decipher it. I mean, so maybe some people actually bought the Canadian dollar, but you need to pick which of these pieces of data to really follow, and so you don't get tripped up or looking at the wrong piece of data when you take your positions. So this is what you should be looking at. Okay, so the NFP, non-farm payroll. This one may be a little bit harder because initially the jobs were that's pretty far under expectations. They thought that was going to be 312. It was 261. This was also lower as well, the hourly earnings, but the unemployment rate is slightly lower as well. So which one of these would you follow after looking at this piece of data? Not looking at the chart, just ignore what's happened on the Euro US dollar chart right now. If you saw these numbers, how would you trade this? That's what you need to ask yourself, because when you see these numbers, again, you need to try to pick which one's what traders are going to really focus on. Is it going to be mixed, low volatility in the market? Is it positive? Is it negative? And in this case, I would think initially it would be negative against the U.S. dollar, but then in the longer term, a more positive outlook on the USD because of the lower unemployment rate. So let's go to the chart and see what actually happened and what's currently happening now. So the push up because of the initial rough numbers on the NFP, and then the shoot down. So the NFP typically will do a whipsaw, either up or vice versa, down and up, and down up and down. And here it did up and down, and it's continuing to go down now, and it's probably going to go even further. It's at a round number right now. Who knows if it will hold, what, 1.16. I do expect it to continue down for the next while. So you can see how traders are reacting to those numbers. There are other underlying circumstances too. You can't just take this data. That data that you see here today, that came out, right? Yes, this is important, and this is, gives the volatility into the market, or just traders entering the market, and what causes it to move. But you also have to look at other things that are happening in the U.S. What are the living conditions? How much strength does the USD have right now? The political scene, how things are going politically. Does the new Fed chair coming in, how much of a role does that play on the strength of the U.S. dollar? So there's a lot of other things that you need to follow up on before making your trade decision. And so this is what I'm trying to do, and I got a little bit of backlash from some users in my last video, questioning, and that's fine to question, questioning that they thought that my call on the pound was subjective. And you know, you could say that it's subjective, but I tried to clear that up a little bit today, and I did write the person back on. And you can check that out on the comments here, just on the video, where I didn't actually think that what I said was subjective. The conditions in the UK are not great right now. The inflation is still off. The Brexit talks are still going on and nothing has been decided. So even with an interest rate increase, the pound fell, and I thought that it would. So those two things, inflation and Brexit talks, are not subjective. That is actually fact. Those are going on, and nothing has been decided with Brexit. And inflation numbers are not quite there. They don't really make sense on raising interest rates at the moment. So how is that subjective? And some other users were saying that the fall in the pound was built into the price. That doesn't make sense to me either, because that means that you're obviously a technical trader. And you could say that, oh, there was resistance up at this part up here, and so it was bound to fall, right? It's for sure going to fall at this peak. It made sense, technically speaking, but you don't really know that it's going to fall, and you can't really say that. And you can say that now because it has fallen. The whole idea of past tense really ruins the vision of traders, I think. Because they think, oh, well, this happened, so that means that it was built into the price. That doesn't make any sense, because the pound could have shot up yesterday, but traders decided to pull it down because they thought that the increase in the rate just didn't make sense. So try to pull all the data that you can and to make a better assessment. Pull it technically, fundamentally, and politically. All these things need to come together to make a clear decision on the trades that you're taking. All right. So let's talk about the trades that I did take today. All right. So kind of a mess, honestly. And I'm going to show you what happened. So I actually tried to, I went live with a new expert advisor, and it was a mistake. I didn't do enough testing on the expert advisor before I went live with it, and it put me into a bit of a hole. So this morning, I got sucked into the Canadian dollar. I was actually doing the expert advisor on the odd Canadian dollar and the New Zealand Canadian dollar, and the CAD, as you know, fell with the trade balance numbers. Well, as you can see, I took losses on all of them, and as it was a floating loss of about $1,000, so about 5%, I was like, crap, I don't know if I'm going to be able to get out of this. This is looking a little sketchy. And I want to be out of this trade before the weekend, so I was considering taking a loss, and or trying to figure out other ways to get out. And because I did see that since the numbers were so good with the Canadian dollar, that everything else was going to fall against it. And so I didn't see much of a recovery happening today. It could get a slight recovery, but I'm not expecting a lot. So that's when I took matters into trying to figure out how I could potentially get out of this. So I know that what I'm going to be talking about here is unethical trading, and it shouldn't be done. And as you guys know, I got myself into a mess doing trying a new expert advisor before doing all the testing. So I learned my lesson with that. Don't add an expert advisor to your account until you do a substantial amount of testing. And basically the first trades that I got into were a mess. So I went to the pound US dollar, and I entered 2 trades. You can see where I entered one here, and then another one here. Now I'm embarrassed to tell you what the size of these were. First one, 5 lots. Second one, 5 lots. And I needed higher lot sizes on this trade so I could get out of the ones that I was in on the odd Canadian dollar. Now these were all trades that it was a semi-martingale expert advisor. Now a lot of people are going to say, well, that's your big problem. It's because it's a martingale. It's a semi-martingale. That means it's a little bit different. It's not quite martingale. You could say it goes 1, 2, 3, 4, 5, and 6, and that's the risk management. It's not martingale where it's doubled every single time, 2, 4, 8, 16, and so on. So it's not quite as risky, but there's still problems with it, and obviously what happened today really got me into a mess, so I tried to get out of it. First entry on the pound. Now that I thought was a pretty decent place because I saw the inside candle. It's a little bit late on the entry. It would have been ideal to enter, just 20 minutes earlier, 15 minutes earlier. But I didn't decide to make this trade until this time. So I entered there. And why? Why did I enter there? Well, I still think that there's pressure on the pound right now, even after the numbers yesterday. And the pullback has happened. I expected a pullback to happen on the pound, and it did. And then I saw this candle here. This candle is an obvious candle showing that there is resistance up at this point. And so I entered right after this candle closed, and that was on the M30. I looked at the 1 hour as well, and wanted to see how that candle closed, and it did also have a big wick showing resistance up at this place. And it happened to be a round number too, 130, around the 131 level. So I thought that it was a pretty good place to enter and to hopefully make back the equity loss on my other trades that were not going to get better anytime soon. So my first entry wasn't that amazing. It shot up against me, and I actually ended up being in 10% drawdown at that point when it was up here. So it shot back up. I saw this candle on the 5-minute and entered again. Now this candle's it's not amazing, but it actually is showing me some resistance. It's a small inside bar here. It's really weak. It's kind of a line graph. But then right here after it, that was a bearish candle to me, a reversal bearish candle, and it was on the M5, and I was also checking what was going on the other pound pairs. So I was looking at the pound Australian dollar and what it was doing in that same area, and the pound Japanese yen, what it was doing in that same place. So during that same area or time, this was happening, and I saw an inside candle on the M5 near this small resistance up here. So I was looking at the other pairs so I could get hints into how good of a second entry this would be. And I entered right there, and it reversed pretty much right on top of my second entry. And it has been going down since, and the strength of the US dollar right now is definitely helping. And I closed out a little early because I left my expert advisor on that closes out my trades. But I did come out with, let me show you the numbers. I did come out with 1.79%, which is $373 on the trade, And then again, you guys might comment about having, well, you had 10 lots out, or more than 10 lots. I had more like 11 lots out. And why did you only come out with $373 after all that? Well, I was just trying to fix my mistake on these two pairs, and I left on my expert advisor that closes trades out at $200, and luckily I had some positive slippage and was able to come out with $375. You know, not a huge profit, but enough for me, and it actually gave me a nice $1,000 week, so I'm really happy about that. Alright, so I say it's unethical because it really is. Fixing a mistake with more mistakes. But I did think this out. I did think this through, that there was potential for me needing to close for losses if things went bad on the pound. And I considered closing out my first trade when it started going up against me. But needed to wait to see how the resistance up here at the 131 area, how it would react with a retest, and didn't even quite make it there. And so I held on to it. And got a little scared again in here when it wanted to retest this area at 131 again, and kept eyeing it on the other pairs, and then eventually did fall. All right, guys, but this is what it's about. This is what my video series is about, showing you the unfortunate truths of real trading, what the mindset that you have going into it and going out of it. I don't like taking trades like this, but like I said, I got into trouble and needed to, with the expert advisor, and needed to try to get out of that so that doesn't get worse. And I came out the winner this time, but you know, losses do happen, and they're part of trading, and I will suffer more losses in the future. All right, so that's pretty much all I wanted to talk about today in this video. I hope I've been going about 17 minutes. And I'll see you guys probably next week for more stats in progress. I forgot to show you one more thing. Robert's account. He came out with $300, and his trade was taken by the expert advisor. And look how good this trade actually is. Look at where my EA entered on price. You can see the push up, massive push up, right? And then the inside candle right at the peak. And the pound was definitely looking for a pullback, and it happened. And the expert advisor basically didn't get any drawdown on that actual trade itself, and it just moved pretty much straight down at that point. But this is the kind of stuff I'm talking about. It's much easier to find this peak than it is to find this bottom and to ride it all the way up. So people would say, "Oh, this is the trend, right? It's moving up." By the time you actually spot it being a trend, it's like halfway. You probably won't even spot it a trend until this area in here, at least, or maybe even later. With how most people decipher trends, they get in by the time it's done. So I find it much easier to pick places in the market where there will be a pullback, and in this case, it was a very good trade. So nice and clean. Took a while, but it did happen. Alright guys, that's pretty much it for today. I hope to follow up again next week, and hope that you also receive some profit on your accounts, and hopefully no losses. Have a good one. Bye.